And it's interesting. You know, Dan made a comment earlier today. Apple, he thought, could have been lower today, regardless of whether or not. And D.A. Davidson today, after the bell, I believe, initiated Apple with a neutral $166 price target. One thing we said, I think, pretty consistently is, I don't think anybody's ever said to short the stock on this desk. What we have said pretty consistently, though, is there will be better opportunities at certain points in the year to buy the stock. And I think that's manifesting itself right now. Over the summer, we thought it could get down to 160. I think it got down to 165 in October. And quite frankly, given the backdrop and that we traded up to prior highs and seemingly have failed now, that 165 level, that Barclays price target doesn't seem unreasonable to me.
I mean, I guess the question is this Apple specific? I mean, the note cited volume declines, bad mix, service revenues down.
It is Apple specific when you think about a stock that's trading at 29 times earnings, that's expected to grow earnings at mid to high single digits and sales growth in the low to mid. You know what I mean? It is Apple specific. You also think about the gross margin that they have in the smartphone space in general. They basically have the whole industry's margin there. So I just think of this. And by the way, Guy, I have probably said to short the stock here. Maybe you guys have not. But, you know, the story in Apple is one of monopoly.
It's by the way, Guy, Happy New Year.
Yeah, Happy New Year. No, but it's management, it's balance sheet, it's all the things that we know, you know what I mean, is working for them. And you could have said the same things that this analyst who downgraded the stock today on November 2nd when the company reported their fiscal Q4, and all those trends were evident. And you know what happened? The stock went from 172 to 195 to make a new all-time high. And what's changed here is just the sentiment, is the calendar, and who knows, could this thing kind of fall back into its 200-day moving average or that support, that uptrend that's been in place, just from a technical standpoint, take one or two turns off its valuation from those highs, take some of the sentiment euphoria out of it? Yeah, sure, and that would probably be healthy.
Well, for one day, I think it's both. In other words, I think the fact that the NASDAQ 100 underperformed the S&P significantly today and that the equal-weighted S&P actually was flat on the day. So it outperformed by 150 basis points, a trend we were seeing towards the end of the year. We're talking about the biggest stock in the world. We're talking about a stock that was up 55, 60% last year. So it is the market overall. But no question, these downgrades were targeting important things about Apple, but things we could say about other companies as well. By the way, Guy, Happy New Year. Just wanted to
go on. If Mike Code does it, that's the end of it.
Yeah. So, but what we're talking about with Apple that I think you could reference other stocks in the market is the multiple, right? So the downgrade is, you know what, we're going to go 25 times a mid 650 EPS for 24, and we end up, where we end up. And in fact, I do think they're going to struggle to grow EPS. So if you start to see multiple contraction across the group, and I do mean the high multiple techs, and I think Apple's the most vulnerable. And part of what they've also singled out here is that they say services are going to grow 10%. That's been the story, right? That's been the multiple driver. And if you think you're not going to go 20%, but you're going to grow 10, I do think it's a case where it's Apple specific.
Yeah, services in China, and they've lost share in China, which is what UBS specifically cites. Mike Coe, Happy New Year, by the way.
Happy New Year. That one's for you, Guy. Look, I mean, when it comes to valuation for Apple, obviously everybody on the desk has already talked about this. It's at the upper end of its range. This is a difficult thing. When you look at companies that are growing at a very high rate and you talk about the multiple, they can always grow into that multiple. But in the case of Apple, it's not growing that quickly. So when you start saying it's trading towards the upper end of its valuation range, you actually can say maybe this is a time to take profits if you've been lucky enough to get them. And of course, anybody who is thinking that going into November and December, if you were thinking it then, you definitely are thinking after that tax year ends. And now that it has, of course, you would expect to see some selling pressure. I don't think that same story applies necessarily to other companies that have, let's call it higher valuation multiples like NVIDIA, which could indeed grow into it, or companies that were up a lot on the year but don't necessarily trade at a high multiple like Meta. But in the case of Apple, I think if you own it, if it's an outsized position for you, then you definitely want to pair it at the very least. We don't own it, and I wouldn't be considering buying it at these levels. It would have to fall quite significantly from here.